Kent, welcome to the show today.
Thanks, Michael. Thanks for having me on.
All right, well, you've scaled your syndication business to a very high degree and want to talk about how you were able to scale it. Before we do, though, I'd like to know a little bit more about your story, how you got into real estate. So in other words, rewind the clock to why in the world did you want to get into real estate in the first place? Like what was going on in your life? You probably read Rich Dad, Poor Dad, and you're like, oh my gosh, real estate. I got to get myself some of that. But what was going in your life that when you were right around getting into real estate, and what was like your first initial foray into real estate?
Yeah, happy to talk about it. So I did read Rich Dad Poor Dad, but it wasn't quite that linear, right? It was I read Rich Dad Poor Dad, knew I needed to be a business owner, and I went out and I started another business. And so really, the reason I say that is because it was really when I went to sell that business was okay. What do we do next, right? And where do I deploy the capital that we're gaining from selling the business? And that was really how real estate came into the story because I started talking with people that were older and wiser than me, right? Okay, I'm getting some capital. What do I do with it? And that was when people came back and said, you got to invest in real estate. You got to invest in real estate. I continued to hear that mantra. And I said, okay, I really have to understand this because like my background was in finance and econ. That's what I went to school for. I was an active investor in the stock market for a long time. So I understood investing, but had no idea about real estate at all. It wasn't on my radar.
Well,
But
let's talk about real estate real quick here before we get into more of your story. You're a stock market investor,
sure.
but a lot of people listening, that's really 100% of what they invest in. But
Yeah.
I actually looked at this recently. A little help from chat. What do millionaires actually? How do they allocate their portfolio? And only 30% was stocks, and an
Yeah.
equivalent 30% was real estate. Right. So most people are not investing in real estate either. Right. And so why was it important? Why did you feel? What was wrong with just investing in the stock market? Why did you feel like you
Yeah.
needed to invest in real estate?
Well, I mean, just thinking about this, right? So, even in school, I really kind of majored in investing. I mean, I took a finance track, focused on investing, and all they taught me were stocks and bonds. Like I remember I had a real estate finance class, and I remember the main takeaway from that class was go buy 10 single family homes
Yeah.
instead of paying full price for one house, buy 10 houses and get loans on them, right? That was
Yeah.
all they taught. No commercial real estate, nothing going on. And so even though I literally majored in investing, it was really stocks and bonds, and it was kind of there's perfect information out there, and you should just build this. You can't beat the market, and you should just kind of build this portfolio out. So that was what I like grew up in and really understood, and was very active in investing. But I mean, the thing I came to realize talking with really smart people out there who are millionaires and how they got there is that is just a small part of the story, right? And so something I believe deeply in was diversification. And what I realized is that, being in stocks and even stocks and bonds really isn't diversification, right? There's a famous quote and it's like diversification's I think it's Charlie Munger, the only free lunch, meaning it's the only way to really outperform is through diversification. And so I realized, wow, I'm really not diversified. I really mainly have all my eggs in one basket because it's all in my brokerage portfolio. Even though I have a lot of stocks, I have the S&P 500, I have all this. And like, if you really like, it's gotten even worse now. If you look at the S&P 500 now, it's something like the top, I don't remember what the current stat is, but it's something like top probably three stocks make up like 30% of the market cap. Maybe it's top five or six, but so even nowadays, if you're in the S&P 500, you're not diversified. So it's gotten even worse. And so the whole idea for me was diversification. That's how you protect your wealth, right? And I learned about real estate. I learned about a whole bunch of other things, but real estate really checked the box for me in a bunch of ways, right? It was tax advantaged. It was non-correlated to the stock market, right? So stock market goes up and down. Your real estate doesn't follow the same direction. Um, and you could get cash flow and you could also get appreciation while writing off on your taxes. And so all those things come together. Once I've educated myself and took the time, I'll be honest, listening to your show was a great benefit during that time in my life. It was like 2015-ish or so. So you were kind of early on and getting started, but providing a ton of value. And I learned a lot, right? And that really led me to, I got to be in real estate. But as most people do, they do what they know. They do what people around them are doing, right? And so I got into real estate in a few different ways, deploying my capital. And but one was single family homes, right? It was flipping and then holding on to some and becoming our own landlord, right? Me and a couple of college buddies. Another was buying notes, so holding the debt on houses, but still single family. And another then was passively investing with syndicators, with apartment owners to try to learn kind of about that space because it was all foreign to me and I just learned about it through podcasts, honestly. So, I got in a different way over that time period, fast forwarding to like 2019, where I really focused on multifamily, had a lot of lessons learned, a lot of bumps on the road, and a lot of reasons why those strategies weren't right for me for one reason or another.
Well, let's talk about that. Let's talk about before we get to the multifamily pivot here.
Sure.
And a lot of people struggle with this, right? They're like, I want to get into real estate, right? And you said people do whatever they're comfortable with or everybody else around them does, which is typically flipping a house or
Yeah.
buying a rental or you maybe even get into a short-term rental or whatever, pad splits. But the
Yep.
point is, there's always some kind of single family house strategy, right? Because people are comfortable with that. The idea of getting into anything else is so foreign. They're like, oh, that's such an advanced strategy. I'll get to that, in a decade, maybe. And so,
Yep.
so obviously you did the same thing. Now you bought some notes. That's pretty fancy as well. But from the things you've done, what were the pros and cons of that? And what were the problems that you identified in some of those strategies that eventually led you to leave them into multifamily? What were problematic with some of the strategies?
Yeah. Man, a lot of lessons learned. One, house flipping is a job and a half. You're not doing it right if you're not working all the time. It's really not scalable, and and you're making ordinary income, right? So you're paying a high tax burden on any money you make. If you don't know what you're doing, you don't have good relationships, you're going to overpay. It's going to take twice as long as you think it's going to. And those are all the things that we learned, as we got into it. Now, that's not to say we didn't make some good money, but the market was also a lot different back then. This was 2013 to kind of 15, 16. But you're just buying yourself a job. So don't think that it is passive at all. It's not. Kind of evolve that into just owning a single family portfolio. That was fine. We got up to where we had about 12 of them, duplexes and singles, and we were self-managing. And it got to the point where there was enough that there was always an issue. Somebody was always calling about something. And it really is that story of like, you get the 3 a.m. call because the toilet's leaking, and it's leaking all over the floor and they call the landlord like that. We were living that life. And I was like, man, this is not what I want to be involved in. I'm not a good landlord. Like I'm not. And that's why I hire people and have a team now who manages my properties for me, because I know that like, that's not my highest and best use. But it was really that, just again, kind of this idea of, I think where so many people, I still talk to investors today, go into this mindset of like, oh, I'm going to do real estate. Maybe I might invest in your deal or I might buy a duplex. Like those are really kind of similar paths, and they're not, because if you're buying real estate or single family home or even a duplex, like you're buying yourself another job. Like don't kid yourself. Like you've spent however many years in your career, if you're a doctor, going to school for 10 years and become an expert in your field, and your highest and best use is going out and being the best doctor that you can be and maximizing your value, right? Not trying to also be a landlord and do both part-time and do none well. Right. And so I just think unless you're really passionate about it, unless you're going to dive in head first, like I did, and educate yourself and spend the money to really build a team and buy all the research and the software and do all the things, you're just not going to be able to effectively do it at a scale that we're able to do it at. And so it's just really difficult. You got to understand you're buying yourself a job, and it is going to be late nights. It's going to be headaches.
Yeah, the word keep hearing from you is scale, and I think fundamentally, because I'm a slow learner. I flipped 36 houses before I woke up and go, my gosh, this surely is a lot of work, and there's no passive income. I don't know what I was thinking. I did it for like 3 years.
Yeah.
But the thing I keep hearing from you is scale. In fact, when I talk about my journey, that to me was my number one frustration with real estate. You read Rich Dad Poor Dad,
Yes.
like, ooh, real estate, flip rentals, right? And then you're like, well, wait a minute. How do I scale this thing? I can't scale it without the wheels coming off. I can only make more money by working
Yeah.
harder. And that
Yeah.
somehow that didn't appeal to me. So to me, I was so frustrated. A lot of people, coming to us, for example, like I have this problem. I have a couple rentals. I have a couple flips. I'm nowhere near replacing my income. I need $10,000 to $15,000 a month. And how in the world do I do it? Right. And this is really where you probably landed with multifamily.
Yeah.
And the
Well,
problem,
go
sorry,
ahead.
the problem with that is people go, yeah. I hear you. That's where I want to go. But I don't feel like I'm ready yet. I need 10 years of flipping experience. I need a bunch of money in the bank. And then in 10 years, when I have more money and more experience, I will then do that thing. Right.
That's
And
right.
so knowing now what you know, and certainly knowing what I know now, is there any reason for someone to skip the single family house investing experience and go right into multifamily? Is there anything like that? Or do you really need to grind it? People need to grind it out for 5 to 10 years.
No, they don't. And a lot of that comes down to limiting beliefs, right? I mean, I
Mm.
had the same limiting beliefs and I had a great mentor who helped me crush through those because it's the same thing. You do what you know and you think, wow, how could I ever go buy an apartment building? Like, I don't know the first thing and it just seems so far off. Right. And so I think that's why people grind for 5, 10 years to try to reach a level where they feel comfortable, but it's not the time that makes you feel comfortable. It's you eventually just have to take a leap at it. Like I don't think you can flip 20 houses all saying, yeah, I can all of a sudden go buy 20 apartments. I think it's just a matter of you've got to think about, why, what is that limiting belief? And you got to be able to push through it and kind of show yourself. And one great way to do that is by getting mentors like I did and people around you who have been there and done that and can show you a path. Like that's a great way to get there. But I also tell everybody a little secret, like it's easier to go buy, well, I'll say a 200 unit apartment building in some ways outside of just needing more money than a single family house. It's easier to go buy a 20 unit apartment building. Not quite as easy as buying a 200 unit apartment building, but it's all about scale. As the scale increases, a lot of things actually become easier. It becomes the financing is easier, right? If you're buying a single family home, the bank is underwriting you, right? They're underwriting who you are and they're underwriting how much money you make. If you buy an apartment building, they're underwriting first, how much is the property making, right? And the property has its own income and they're really underwriting that. And you can even get loans that are non-recourse, meaning you don't have to personally sign on the debt, right? Which is a huge risk in any investment. And so you're able to, by scaling, limit your risk. You're able to just, I mean, one thing I learned by buying even 12 houses was how hard it is to find a good deal. I mean, to buy 12, we looked at hundreds. And so if you can go buy 100 houses, right? 100 doors at one time under one roof in one transaction, it's a heck of a lot easier than trying to find 100 houses out there. And you can scale a lot faster. And then when you scale, everything becomes cheaper, right? You can get better insurance for a cheaper rate. You can hire better, more qualified people to manage your property, and you can do it at a cheaper rate, right? You can not pay them less, but as a percentage of your overall, it's a smaller percentage of your overall revenue. And so all of these things become easier the bigger you go. And so it really is just getting past the limiting belief, I think, by finding a path forward.
I think it's counterintuitive what you're saying, but it's so true. I agree with you, and I think the way I look at it is I really compare what you're talking about from going from a single family house investing mindset to more of a scaling mindset. There's some shifts that people have to make. There are certainly limiting beliefs, but there's also shifts in thinking entirely. So what I mean by that, and you used it a couple times along with scale. You mentioned the word team. Okay. And I want to hone in on that because to me, when I was flipping houses, I didn't really have a team. I didn't need a team. I was working with people. I didn't really consider them team members per se. I mean, I was working with one or two brokers. I had a general contractor, but in the syndication world, the word team is quite a bit different. And I think that's one of the reasons it's also easier to buy a multifamily building because of the idea of a team. And I think the second thing that makes it easier is also the idea of raising money from others. Because I was using hard money, right? Which is people don't need to raise money from other. They can just use hard money and be fine. So the idea of a team in general, both a team of investors, a team of professionals, a team of advisors, a team of partners, okay, all that thing is completely new. And for most
Hmm.
people, very, very foreign and unnecessary in a single family, but it changes everything. So talk about when you went into multifamily, especially recently when you started scaling to a much higher degree, what has been that shift for you? Is it the team? Is it something else? How did you make that shift into multifamily and were able to scale from single family houses?
Yeah, I mean, great question, right? And so when I started in multifamily, I mean, I started out with just myself, and I was doing everything. I was buying the deals, I was raising the money, I was securing the debt, right? And you realize pretty quickly, you can only do so much. You can only wear so many hats. And so my scaling came in a couple ways. One was bringing on a partner who had a complementary skill set to me, right? And I think that's really important in a partnership. I think one is you got to find somebody who's like-minded and you have the same values, same goals, same belief system, right? And you guys are going in the same direction. But then you got to find somebody with a skill set that complements yours and isn't the exact same as yours, because you don't need two people with the same skill set doing the same thing. So what we were able to do then was he really took over the equity raising, and I was able to focus more on the deals and the debt and and that piece of it, and that gave me scale, right? It allowed me to
Mhm.
focus more on what I was great at and spend more time doing that. Then the next evolution was really building out a team under us, right? A team of employees, and that's where you can find fantastic knowledge and leverage to allow you to continue to grow the business. Where we just brought our property management team in house. We went from 7 employees to about 30 employees in a matter of a day. Um, and but what's amazing about it is the president of our property management company, Hudson Residential. She's been in property management for 30 years. She's got 30 years of experience. Her right hand also has 30 years of experience. So the breadth of experience, even though I, have been investing in real estate for, I mean, I'm getting seasoned. It's going on about 12 years now from when I started. It's a lot, but just having people on the team that have 30 plus years of experience in a specific part of what they do, it's just, to think about how as a new single family operator, you could operate at the same level, right? And expect to get the same type of results. It's just not possible because you just don't have all of the lessons learned. And so that, and bringing those people on and kind of filling the seats below has been an extreme value in allowing us to continue to scale and continue to grow and just make our investments safer by bringing in experts in specific areas, from maintenance to analytics to their actual property management, right? We're filling out all these seats of specific experts, people in those roles that are better than me at any of those specific things, right? That's what you're trying to do when you're hiring somebody. You want to hire somebody better than you, ideally, at that part. And so now I'm able to sit, more in a strategic position, right? And kind of see the forest beyond the trees and allow my team to manage the day to day and the week to week and the month to month. Um, and really, because we've been able to do that, I mean, it's one thing that I think has just created tremendous value in our portfolio, and you can see it through the returns in our investments. You can see it through the bottom line in our properties. It's improved as that team's grown and really come into place over the past couple of years.
A lot of syndicators who do their first deal, their idea of scaling is to just do another deal, only a little bigger. It sounds like you may have started the same way because most people are single syndicators, and that's kind of how they
Yeah.
get in there. And maybe, I don't know, maybe you felt like you were struggling or you were stuck somehow until you discovered this idea of a team.
Mhm.
What are some of your top lessons from scaling your syndication business?
Yeah, sure. So, businesses grow. They have growth spurts and they plateau, and then they grow and they plateau, right? So I grew and then I plateaued as a single operator, right?
Hmm.
I couldn't do anymore, and as we were acquiring more properties. It took more time to run those properties that we have, right? And so I really had a mindset at that point that I was going to kind of control everything, and I was going to keep it small, rather than going out. Some, and this is way more prevalent a few years ago, but I would see groups go out and they would partner up, and there would be maybe 10 or 12 people on a GP, and everybody kind of met at a conference, and that's great, but like you really didn't quite know who you were getting in business with. So my mindset was, I'm gonna just keep it small and do it all myself. Well, I plateaued, right? And it wasn't until I found that person to partner with that allowed me to get past that first plateau and keep growing. So I'd say one, a business like this is too much for any one person to do. I think you need to build a team, or you need to find a partner again with a lot that's like-minded with complementary skill sets. That would be my first recommendation. Um, you also, I would say, first time I ever went out to raise money, I came in way under my goal. I found out, wow, it's way harder than I thought it was going to be. And I think that's everybody's experience when they first go out to raise money. But I would say, you need to start thinking about that, way earlier. If you want to be a syndicator, you got to start thinking about that way earlier in the process, and you just have to start building trust, but also, the first people you're going to raise money from are going to be your friends and family. You're going to be, maybe it's got, college friends, high school friends, whatever. Well, they all see you in a certain light, but they don't see you as a real estate expert. And you really need to start to, act as that expert, start talking about it all the time, and start really changing their perception of who you are. Because, just because they're friends and family, some might invest with you because of that, but a lot of people, just aren't going to. And so you've really got to start to change people's perception early on. I think, and raising capital is much more difficult than people think, but it's not impossible. It's all about building trust and showing that you have the expertise and the drive, I think, to get it done. Those are a
Well,
couple
I think
early, like I'm trying to think 5, 6 years ago, what my lessons were. Those are some early ones.
Well, certainly, if you're stuck raising capital, having a partner that focuses on capital is probably a good solution. Like in our world, there's like two major roles that you described. Like we call them the deal finder and the capital raiser, right?
Hmm.
And people, from a personality perspective, gravitate more towards one versus the other, right? And so, in our world, this is why we always put them together. Like you go through our program and you go through basically, the basics, fundamentals, but at the end you have to kind of choose a career track. Like we force you. Some people are like, oh, I can do both. I think, no, you're not doing both. You're gonna pick one, and you're gonna partner for the other, right? Because like you said, if there's one person accountable for finding deals and transactions, that's it. That's your job. You're gonna get deal flow, talk to brokers, get the deal, and the other person is accountable for capital. And so we find that works really well in scaling a syndication business.
Yeah, and I think that works really well. You get a handful of deals, and you and your partner can manage it. And then I think you start to scale beyond that, right? I mean, I think right now we're at about 15, and we're currently building 2 buildings, and we're acquiring another property. So we have a lot going on, and you have to start to build out a team. In my previous life, I was in management consulting. I flew all over the country helping businesses solve problems they couldn't solve themselves. Right. And so I got a great perspective of like what makes businesses work, what makes businesses fail, why is this business struggling, why is this other one not, right? And one of those things was really culture. It kind of kept coming back to me: culture, 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 the culture and the environment. And so I've been just hyper focused on culture as we've grown. Even in my first business, I saw some of the pitfalls of growing very quickly and seeing that culture become diluted over time. And so we've been hyper focused on maintaining just a world class culture, with very solid mission and solid core values that we hire and fire and reprimand and reward against. And to me, that has been the absolute game changer that has allowed us, I think, to be so successful. Is this culture, and particularly the core values that everyone rallies behind. It's the first conversation I have with new hires. It's the first conversation even in the recruiting process before we even really have an interview. We just have kind of a core value conversation. And so that piece has been absolutely critical. And so the tip would be, spend the time to understand what your values are and hire to those values. You can hire, you can teach hard skills. It's really difficult to teach the soft skills. and it's really difficult to teach somebody to have a personality that aligns with your core values. They're either going to be excited about it or they're going to be off put by it. I think that's the best quick no you can ever get.
You mentioned earlier that you brought property management in house. What was behind the decision for doing that?
Just frustration.
So okay, I know
Just
where you're going. I think I know where you're going to go with. Okay, it's frustration. Okay, but here's the thing: as you know, you're going to solve one problem, which is frustration, and you're going to replace that one problem with a whole bunch of little problems because now, like you said, you went from 7 to 30 people.
mhm.
So you must have weighed this in your mind, in your team, for probably a very long time. Are we going to solve this problem of frustration, and now we're going to introduce a whole bunch of other problems? What was that decision making process?
Yeah, I mean, it just, all right. When I was, working throughout my career, working with different property management companies, a lot of different companies, um, what I realized is that the example I use is like nobody's going to love your baby like you do, right? As the owner, nobody's going to love that property like you do. Nobody's going to treat it as well as you are, and nobody's going to take care of it like you would. And that was consistently what I saw. One of our core values is unequivocal excellence. It's just this pursuit of excellence, this 1% better every day. We're always improving, right? And I did not see that come down to the ground floor because many times at our properties, because we had a third party in between it, right? And when you think about that, and the other thing I've learned through my real estate career is that, nothing will make or break your deal like a good or bad property manager. Those people on site every day that are building relationships with the residents, that are signing leases, right? That are really selling your property, and that are making people want to stay there. I mean, they're absolutely critical. And so to not have just absolute A players that aligned with our core values and be able to see that come down to the ground floor just wasn't an option for me anymore. I absolutely understand what you're saying, and I think I've had a couple businesses now, so I understood what that would mean. But I was up for the challenge because we talk about like Tony Robbins, you move away from pain and toward pleasure, right? There was enough pain in the property management's performance or really lack thereof that I was willing to get on board to launch that new company because I would rather have the frustrations that brings any day because I know we're improving. We're going after excellence, right? And we're getting better every day than just constantly being frustrated at mediocre performance. That was really what it came down to for me.
Yeah. What's your outlook for the future, Kent? Are you excited about multifamily, or are you more cautious? What are you seeing?
I'm excited about multifamily, but real estate is very local, right? And so I think you have to, I'm not excited about multifamily in every market. I'm excited about multifamily though in the Midwest, where most of our properties are. The Midwest has seen a great revitalization. We've been leaders in rent growth. I'm in Indianapolis here. Indianapolis has had fantastic rent growth. And a lot of that is because the Midwest has had muted supply versus other markets in the country, right? So other markets where supply, there's been oversupplied, right? Now we're seeing rents pull back, occupancies pull back, and things need some time to catch up. That really hasn't happened, And so we are in the Midwest in Indianapolis and Cincinnati, Dayton, Ohio, Louisville, Kentucky, and those are all markets that are relatively supply constrained. And those are kind of these steady Eddie markets where we see solid rent growth come year after year. And so that's really what I'm excited about. I'm excited that we're getting a lot of interest into our markets, way more than we were a few years ago, because we always didn't capture the top headlines. But I just always believed in them because I was really a value buyer, wanting to buy great deals, and just wanting to have stability. Not do the cyclical ride of kind of boom and bust. And so in the Midwest, I'm very excited about where things are going. I do think we are, finally, who knows where interest rates are going to go. I've stopped predicting, but I do know that whoever the next Fed chair is going to be there because they're going to cut rates. Trump has made that pretty clear. And so I think we're looking at next May as well, who knows what's going to happen between now and then, but next May when the new Fed chair comes in, I can almost guarantee you rates come down. So I think that's going to help with values. Um, and I think another thing that's been kind of great about any cycle, right? There's kind of boom bust, and every time there's this down cycle, there's kind of this culling of the herd, right? And that's happened. There's a lot of groups that were syndicating a couple years ago that are not anymore. But the groups that are still here, I think, have proven that they're good operators. I think they've proven that they're staying power. And I'm frankly, really proud that we've come through the past couple of years being a relatively small firm. We made it through, and I think we're stronger than ever. And I think we're poised for the next cycle, which we believe, we hear 25, but especially 26 and 27. What's happened with high interest rates, right, is really a lot of development projects were put on pause. And so we saw construction really dip. And so the expectations for multifamily really nationwide over the next couple of years is that we'll see rents begin to increase again. And we'll have a very favorable kind of landlord type market where there's high occupancies and high rents because of limited supply. So I think you got to pay attention to the supply in your market. But to me, in the past couple of years, that's been the main driver of success or failure in a market.
Yeah, I mean, we're an Atlanta market, so we've seen much wilder swings than you have in the Midwest. I think people who are invested in Dallas and Austin saw the same thing. Just
Hmm.
massive run-ups in 22, 23, and then kind of, a lot of supply coming out, Class A concessions kind of clobbering Class B and Class C. It's kind of wild, actually. And
Yeah.
so, but it looks like it's slowly all coming to an end. You guys you probably didn't get the run up, but you also didn't get clobbered quite as much more steady, which actually is better in my opinion.
Yeah, I
But
mean, we're still experiencing 5 to 7% rent growth here.
yeah,
It's
yeah,
great. I mean, it's way above what we ever pro forma'd, in our three
it's
percent, 2 to 3% expectations. So we'll take it all day.
it's interesting. There's a lot of new supply, for example, in Dallas. We're not in Dallas, but we look at some of these bigger metros, and they've
Hmm.
already the rents started going up because the absorption has already absorbed a lot of stuff. In Atlanta, for example, where we are in, we expect it to happen early Q4, where the new supply is being absorbed and the rents can probably start going up towards the end of the year. So it's like you said, it's a matter of supply and watching that supply.
Hmm.
But what is true, and this is probably true in every market, is no one's pulling permits for new stuff. So no one's
Hmm.
building new stuff anymore. Well, you probably got some development projects going on, but it's going to be probably Class A, whatever any is building. So in other words, if you're in an affordable space somewhere between Class B and C somewhere, it's going to be difficult to build more. And so I think
Yeah.
longer term, I think that's why there's going to be a continued demand for multifamily over the next 3 to 5 years.
Yeah, I mean, all of the only projects that we can make pencil on the development side are public-private partnerships,
Yeah.
meaning that the city or town is partnering, and really what that means is they're really in certain ways, whether it's tax abatements or TIF bonds, they're helping kind of chip in for some of the equity in the deal. And that's really the only way to make it pencil for
Mm.
the the other investors to make the return profile, the risk return, right? The risk adjusted return be in line with what I think investors should expect for a new development, which is just inherently more risky as you take something from dirt to a building versus buying a building that's been there for 30 years, right? It is inherently more risky, and I think they should expect a higher return. The only way to make that happen really is through these great partnerships with the municipalities that we've been able to work with. And I think it's a win-win for everybody because they want growth. They want people to come into their towns. They want the growth, but they need the housing.
I think it's a great way to partner with these local governments and things of that nature to make the deals pencil and remove some of the risk in doing those as well. So
Mhm.
I think it's a good way to go. Kent, how can people connect with you, find out more of what you're up to?
Yeah, I mean, you can check out HudsonInvesting.com. We've got a new deal we're raising for right now. It's in Fort Wayne, Indiana, just a little hidden gem, nice workforce property. You can also find my podcast. It's called Ritter on Real Estate. Michael's actually going to be a guest here soon, or may already have, depending on when these air. But check out Ritter on Real Estate. Very similar. We're interviewing folks and just trying to learn how to be great investors. So both of those places are great ways to find me and connect.
Well, it's been great to have a conversation around scaling with real estate. So thanks for being on the show today, Kent.
Yeah, Michael, thanks for having me on. Like I said, long time listener, I think first time guest. So happy to be here.